Good morning, everyone. It's 27th January 2017, and welcome to this edition of ProAMT Traders Digest. Let me go through the disclaimer first. Trading in stocks derivatives involves substantial risk of loss and not suitable for all investors. Past or simulated performance is not a guarantee of future results. All systems, indicators, strategies shown here are for education purpose only. All levels discussed here are for understanding the study and not a recommendation to trade. Please consult your personal financial advisor before making any investment or trade decision based on anything that is discussed here. We will not be responsible for any resulting profits or losses. So let's first have a look at what Nifty has done. The expiry turned out to be extremely bullish. It scaled up the highs of 2017 and closed almost near the highs. So let's see the TPO chart first. So I'm doing this on the February contract because today actually we'll be trading the February contract. And what happened in February contract is there was a freak open low, and which was at the point of control of the previous day, and then it directly started trading above the previous day high, and a bit of compression here in the IB. So the B period, when the IB was formed, then C period retraces back below and is not able to go even into the previous day's range. Then continuously one time framing up, and as it one time framed up, the range went on expanding, and we have huge volume coming in the last 1 hour. So 2 30 minutes bar in the end have huge volume, and this will be a decider. So this congestion and this HVN at around 8572 would decide where it wants to go next. So till that is not taken out, the chances are that it might balance on the higher side or even might want to go higher. 8665 and 8695 are the upper references, and above that 8715. So that is just a broader reference, not meant for trading. We'll first have a look at what we have on the 1 minute chart. So clean trend up in a very channeled move, if you can see this. So a rising channel going higher, and then breaks out on the higher side. Now you can define this as you can define it like this first. Maybe draw a line here, and this is a rising wedge breakout. Then again make a bigger wedge, again a rising wedge breakout, or you can consider this as a balance and then a break from that balance. So any which ways you take it, it was the kind of push. If you see, all the positives are higher and there is no negatives. The negatives are not much higher. Each 1 minute it was going, the delta was going past the standard deviation, and finally if you see, there was a bit of selling into this consolidation, but all sellers taken out, and the delta has been green continuously. Though this delta can be the rollovers happening, the people covering from the January contract and entering the February contract. Now let's see the 15-minute chart. So on the 15 minutes, if we see, we have a no demand coming in here, no demand taken out, again a no demand coming in here, no demand taken out. So there was no demand as the rise came, but all no demand bars were taken out, and we get a first spike. So this spike is not for selling because the point of control is here, needs to be taken out. Again we get a up thrust. Now that up thrust point of control is higher, which is taken out, but all supply is absorbed in one go. So this push down could not fetch any supply, and came to a very visual reference, very mechanical buying here. So this was the final push for the shorts to be thrown out. Now what happens when the market opens in a gap, and when it consolidates a bit? The moment this high is crossed, there are sellers waiting to sell that. Once they sell and are not able to move the prices down, if you can see, there were sellers into this. They thought that they will be able to move the prices down. They were not able to move the prices down, and they are running for cover. So as the prices go higher, it's the sellers who fuel this rally, because they want to just get out. Once they become sellers, once they are into a sell position, they want to buy it, because they are standing with their buy orders at the lower side. Obviously they want to buy in profit, but when they see prices going against them, then what they have to do is there's no option but to exit. So that is how this rally was fueled. And let's have a look at the Renko. Now this huge impulse is that false tick, but I always keep the false ticks there, because it doesn't make sense to remove it. There was a traded volume, that's why the tick came in, and those guys would have some intention, not necessarily always a fat finger. Impulse tried to create an impulsive move up, failed, comes back down into the zipper, does not get any supply, pushes back up above the high. A minor zipper rotates, impulsive move up, again comes back, does not even breach 50%. And again another impulsive move, again the same thing, does not breach 50%, and another impulsive move finally. All the volume created at the highs. So this becomes an important reference. 8615 is what we'll be looking at for any failure initially, and then look at this zone 8588 to see what it does there. Finally this 85727 actually 70, or even 68278, this 10-point zone is my point of interest, what it wants to do there in coming days. Now let's have getting hypos right in this condition would be extremely difficult, because my way of hypothesis is not where it is going to go, or where it is going to go up, or where it is going to come down. The hypothesis which I mark on the chart is my assumption and my thinking, my thoughts of how the auction might progress through the day, not just where it can target to, but how it might rotate within. Because that I am visualizing that if it's a normal orderly auction, it would behave in a particular manner, and I try to frame that. And how it helps is like during the day when it's happening, I know that okay, if it's going into this, I am expecting a rejection and coming back down. If it's pushing through this and coming and testing back, then I'm expecting it to push back higher. So that is the way I frame the hypos. So it's very difficult to get a hypo right in this situation, because the market might open gap up somewhere into this zone and might come down to test, or might not even come down, start rotating near the open, and then might want to push higher. So open outside of the range 10-20 points, I can guess. Beyond that, if it goes, the hypothesis can work both the sides. It might come back down to test the highs of the previous day, or might rotate and create value just in there by leaving the gap behind. So any which ways, I'll just draw assumption of what I'm thinking based on the previous micro composites. So based on this, if we are trading into this zone, there was a HVN here earlier 8585. So it has crossed above that zone. There is a micro composite VL from 30th September at 8605. So I would expect that till it stays below, till it stays above that, it might want to go towards 8055. 8052 zone, which is the micro composite VH of that balance. And there is a gap also there. And then if you see, there are high volume nodes here, 8670, 8615, which is again an important reference this time as well. So these references are from October, and then November we are trading above the November highs. So I would first assume that this November high, the first November high of 6, what was that? I never saw that this first November had gone up, and I thought that we are trading above the November highs. So that is 6704.60 is the November high. And there is a nice balance here. This micro balance would also be, so in case it pushes up above 8652, I would be looking into this zone, and also that VWAP of 8672. So that is the point of interest. The lower point of interest being this zone where it wants to push below this HVN, because this is the composite HVN from earlier. This would also act as a very important reference. So based on this, I want to just do a hypo for today, that what we can expect. So in case it opens gap up, and so we'll consider the hypo from as a continuation from this point. So let me draw it. So in case we open gap up, push into the 8640 zone, come back down into the 8615 kind of zone, rotate here, and then make its way up higher and push into the 8665, consolidate there, and then push towards the 8695 zone. That is what I'm expecting. In case it opens here, then we consider from here, and then we consider this as a continuation. So in case it opens near 8650, we start assuming that this would still be in place, so it might come back down, push again test, and then make its way up. Suppose if it fails into this 8640 zone and also fails into this zone, then I'm expecting that it pushes down into this zone, into this zone, check for any buying interest, push back up, and then make its way into this HVN, which is a important reference going forward. So that is what I'm expecting for today. I'm not trading till the budget day, because this is not my kind of markets. I can obviously, the system is long 30% of the trade. There was a long on, but that is not what I am interested in, because it's not just about making profits. It's how I would visualize market, and I would like to trade it, because see, money can be made in many ways. Systematic trading is also a good thing to do, but as it's not fully automated, we have to punch in the orders, and that's why I would always like, when that is happening, when the system is giving a buy, I would think that this is a bad location, and why is the system giving a buy there. But now it's a back tested system, just changing few parameters to fine tune it, because this is, I think, second or third scenario after I started like using it, where it has stretched way beyond the reversal point. So the system might trigger a sell at 8515 at this point in time. So if it's like 100 points away, more than 100 points away, I want to do a back test where we can get a decent exit until where it stretches and gives a retracement back. Don't want to take more time describing my systems and wasting time, because this we can discuss anytime in the room. Now let's have a look at the bank nifty. Bank nifty seems to be more scarier than nifty. Open just at the previous day high, almost within the range, and directly pushes up, creates IB similarly like nifty did, and then if you can see this short covering initially and then breaks past that. So once it breaks past that short covering, comes and tests back the, if you see, this is a nice balance, so it tests back that balance, makes its way up. So one time framing from this period, 1 2 3 4 5 6 7 periods of one time framing, and finally a huge spike up. So my expectation is that this huge spike might get accepted into and create balance, because this is, if you can see, a very thinly traded. Now this is opposite profile. This might, if you consider this as a fresh auction, in case it starts trading above this, then what we can expect is it might want to push even above this zone, above the 19610 zone. Now let's have a look at the 1 minute chart. A balance, a huge balance forming initially, and then all of a sudden a breakout balance, again breakout balance. So it breaks out slowly and steadily, balances, again breaks out, balances, again breaks out, balances. So too many micro composite balances there. Not even micro composite, you can like, these are like very tiny micro balances. And finally, all of a sudden, there was a spike in between as well, and then a spike all of a sudden down. So a very awkward kind of trading environment. Like there is no way, if someone says that somebody bought here, assuming a breakout, or somebody bought here, and he knew that this is going to fall from here, and that's why existed. That's why he exited. It's just like you can listen to it and just take it out from the other side, because there's no way whatsoever to be that precise. And Because nowadays what happens is like most of the people are long. When the market is going up, most of the people are wrong, and the market is coming down, 99% people are short. So if that was possible, then the markets won't exist. So I know that in the room also there were many guys like thinking this might be a reversal level. Though I was not trading, but obviously if I was there, I would have sold this, because it's going into a reference, creating a spike, test the volume drops. I would also sell it. But what I would do is, do not fight with this kind of move, because it's making its way up, and it's a contra trend trade. So I would like find the nearest point where I can exit. If I'm getting 2 points, I won't hesitate to even exit at my stop loss. Because see the way it has pushed up, so this 3 minute bar is starting, it's coming down 61.8% almost of that 3 minute bar, is still not a selling sign. And when the delta goes positive at that point, we know that this is going to push higher. Now again what happens is, you get a spike, you see the delta negative, again you see no demand. Obviously you want to sell it, but here the best way is like keep 20-30 points leeway, because that would help much more if we sell after the confirmations. So on the 15 minutes, same, you can see like it has not stopped. There was a lot of selling coming in here, all selling taken out, a big flush out coming in into this rise. You can see the delta. So these buyers who have bought at this test are ruling this market. Now let's have a look at the Renko. Not much to see in that. A nice balance happening here, a test of the mid, and then pushes higher, again comes back and tests the mid. See the way it is behaving here, it would give almost a feeling that this is going to like push down, and that's the same point which we are looking at, that in the opening itself it's giving such signs. Where is the open? Okay, yeah. See the delta starts dropping before the rise, so the sellers are coming into that rise. But if you see, there is no supply coming into the lows. So when that is happening, even see these tiny 1 minute channels also do work. So this is a 1 minute channel. You draw this, you draw this. This is a channel forming. So or you can consider this along with this as a flag, or you consider this as a consolidation zone. See, however you want to see it, we need to make sure that you pick up a reference that the market has generated and then follow that. There is no need to just see the profile or just the order flow or just the volume. Once you mark a balance, you need to figure out a zone where the market might find a demand or a supply. So now let's get back again to the Renko. So this gets bought into. Now a confused move till it breaches this high, and then all of a sudden an impulse goes sideways, impulse goes sideways, impulse goes sideways, impulse, and then continuation impulse falls back down, has not been able to breach this. So a completely trending auction, generating huge volumes as well. Now again the similar story like Nifty. There's no way to figure out where it can go further just for a day. We can visualize the broader scenario, but not a precise scenario for the day. So here I am expecting we'll work with this balance, and I'll need to because we have reached this zone and there is no value created in this zone. So this is all messy here. There is a minor balance here above 650, and 650 19650 is the VH. The close we have got is 19509.85. So let's see, where is 19509? 19509 is somewhere here. There is a LVN here on the composite, but if you see here, we don't have anything much to do. The POC was higher when there was this profile was formed, and expecting a push into this 19650 zone, and then might reject there. Or if it rejects here, what we want to see is it at least starts accepting below this 304 HVN. So now based on the current scenario, let's see the hypothesis. In case it opens somewhere into the gap, so can be here, pushes into the 600, comes back, rotates, pushes into the 650 zone, rejects there, comes back down and makes its way down into this zipper. This is an important level. So makes its way down into the 425 kind of zone, and then push back up, test for any supply left into this zone, and then start balancing into this zone inside and create a balance here. So that is one scenario. In case it's able to stay above 650, then come back down below to check at 650 and then make its way higher. Maybe not today, but any point in time, this can be the scenario. And if it fails to hold into this, then might go push into the day mid of yesterday or day before. Yesterday was a holiday, so, and then finally make its way down into the volume point of control. So that is what we can expect. But make sure that we need to follow this path, because the auction might want to follow this path. Check here in case it opens gap up and comes down, or it opens within range and pushes higher. So whatever happens, this becomes a point to look at what it does there, and this becomes a point, the other HVN here and the congestion zone becomes a point to look into. So I think that's what we can actually assume out of the given information. And while we are here, let's see what happened to the what happened on the daily volumes. Or we can have a look into this as well. On this chart also we will be able to see the dailies. So the other problem with this was the volume started coming for this rollover. So there's no point seeing the volume here. We'll need to see after this week ends. We'll have to compare it with the historical data. I thought that there will be a nice there will be some information there, but no point seeing that. Anyways, so I think that's all for today, and we'll catch up now on Monday and see what information we have from today, and we'll try to gather the fresh balances, and on Monday we'll discuss the recent balances. Thanks again, and have a nice trading day ahead.